good morning, traders and investors. My name is 𝗏𝗏, and with me, we have my usual co-host, 𝗳𝗶𝗶𝗃, and I want to welcome you to the midweek roundtable. Now, before we get ahead of ourselves, which we tend to do sometimes, Jeff's email, very, very important in case you want to contact him, is jeff@𝗖𝗵𝗲𝗃.com. That's jeff@𝗖𝗵𝗲𝗃.com. And if you want to check out any of Jeff's material, some of his publishing efforts, just go to wealthpress.com or visit 𝗖𝗵𝗲𝗃.com. My name is 𝗏𝗏, and I'm the senior strategist for Wealth Press. And my email contact info is support@marketgeeks.com. It's an old email. It gets to me that way really, really fast. Jeff, how are you doing today?
I'm well, sir. How you doing?
I'm doing great, 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 great. Did you have a nice little break from the market?
Yeah, always nice, but I miss it. By the time it's over, I start working,
Yeah.
By Labor Day, I'm working again, even though things aren't open. I just.
So what are you seeing on the horizon since we spoke last week? I know it's a fragmented week. It's a holiday week. Things are just starting to get out there. What's your take on things?
It's kind of like bearish, but it's kind of, there's not, like you said, you were saying it last time we spoke last week, that it's not going to be like the light switch turns on and then there's like all of a sudden this action, specifically with this year's Labor Day coinciding with the Jewish New Year, Rosh Hashanah. A lot of people celebrate that, observe that, particularly in the Northeast. And, it's going to be kind of like a gradual volume, veracity experience. But I've been seeing bearishness for the most part in some sectors. And I've been seeing still like that clinging on to big cap growth tech, still a bit in Tesla, Netflix, Apple, companies like that. But underneath the hood, which you really focus on, things are, not looking so great.
No, I was just looking at momentum levels this morning, and we literally have, don't quote me on the, but I think it was like 52%, 52.5% of stocks trading above $2 right now. Any stock trading above $2 that's trading above the 50-day moving average. I mean, like 52%. So we're not doing that great. I mean, we're as flat as a pancake,
Yeah.
So I'm not really seeing anything. And generally speaking, you and I have been doing this for over 2 decades. And typically what I found out, and this is just a general rule of thumb, I don't care if the market is off. If there's like a holiday where you get like an hour off, the market closes an hour earlier, it'll be a fragmented week. Anytime you have any type of holiday, any excuse for people to go out. I mean, it just never, ever disappoints. And some are worse than others, obviously. But this in particular, to me, this holiday signals the end of the summer. And a lot of people are, what I find is that usually people make plans to travel back home from long vacations. As you said, Rosh Hashanah is here right now. It just doesn't look like things are going to pick up at least till tomorrow, Friday, and we're probably going to start rocking and rolling by Tuesday or Wednesday of next week. If I had to put if I had to bet on it, I would say middle of next week. What's your take?
Well, I mean, I think that everybody, and I'm going to tie this up nicely to what you were saying. So everybody had hoped, there was like this huge expectation and hope that things would instantaneously come back to life. Everybody that has been working remotely will suddenly have like this inspiration to get their butts on a subway and a train and a bus and a helicopter to get from the beach back into the office as soon as Tuesday, as soon as Labor Day was over. And that ain't happening, kid. People are not going back in. Life is stuck this way. So I think it's kind of like, this was kind of like a psychological point where everybody wanted to see, by then things will be all the way back to normal. And they're just not. And I think that's kind of a letdown. And you saw yesterday, you saw Goldman Sachs, you saw Morgan Stanley, and you saw Barclays Bank all got bearish on the US economy, the recovery at the same time. They lowered their GDP estimates and on the stock market, which is for me kind of interesting because this big expectation that there was going to be like this big post-Labor Day glow up, as my teenage daughter would call it, and everything would get amazing again, just isn't the reality.
Right. Yeah. It just doesn't. And you can even tell by the bond market, which typically the stock market gets its focus from the volatility in the bond market. Just nothing there.
Nothing.
And here's the thing. It's very, very tricky time because these slow trading action can a lot of folks who are just starting out and who haven't been around the block more than a couple of times, they look at this trading action and they think it's meaningful and they make decisions based off of it. And I'm telling folks, do not do that. This is not a time
That's a great thing to say. Don't make a decision. Don't make a hasty decision based on a nothing move. I'm like,
right.
And people do. The new guys do it.
Yeah. It'll suck you in. The market will suck you in. It tends to do that during these type of periods. And then next thing you know, so be very, very cautious. Aside from the doldrum, the boring doldrum of the summer, any specific sectors that you have your eye on a longer term basis, obviously not just, for this week, anything you're looking at, anything that you're fearful of? What's on your radar these days?
Well, there's the travel sector is an obvious low hanging fruit for me. I mean, they were airlines, and I don't remember which airline executive came out yesterday, and he said we have been counting on a big uptick in business travel post Labor Day. So summer's done, right? And so everybody's looking at the new catalyst. Like, what are these guys going to do to make money? I don't know if you've looked at plane tickets, but they're like, you can fly to London from Miami for like $300. You can fly round trip from Miami to any New York City airport for $80 plus, like, with tax. And so how are these guys making any money? Like, does anyone sit there and look at this and say, how are these guys making any money? Well, the answer is they were hoping that business travelers like us, we used to travel a lot for business, would, say, well, book me a flight. I don't care what it costs. Like, I just need to go from this time to this time and like 24-hour notice, right? That was their big meal ticket. That isn't happening, right? So that's one low-hanging fruit that I've seen that I think that everyone should be paying attention to. I do like banks because I do expect like an explosive increase in rates. I think that everyone's off sides on that. I think the shock move is going to be, and it's like very contrarian, except for you. You and I discuss this every week. I think we're going to have a move of like 30 to 40 basis points higher on the 10-year within like a few weeks. It's just going to happen like that. Like a light switch is going to go off and it's just going to reset higher. And I think a lot of people are going to get caught in that. I think a lot of stocks are going to get hurt in that, but I think banks will rip on that. And lastly, one thing that I wanted to draw your attention to is what's going on with crypto. We had like a crypto, I don't know if you saw what happened yesterday, but there was a bit of a crypto crash yesterday, and it was a flash crash. And I just did a video before I did this one, because I don't know if we're going to do this one, full disclosure. So I just did a video before this one that I recommend everybody on YouTube watch about Coinbase. So I had this experience with Coinbase, and they got subpoenaed by the SEC today, which they should, because they're operating like they're a legitimate broker dealer, and they're not actually acting like one. So I tried to buy the flash. I know this is a lot, but I'm ranting, but I have to get this off my chest. I tried to buy Ethereum in this flash crash. It went down 15% yesterday, 11:30. Not a lot, just put in a few grand. And the money got taken from my bank. I had the spinning wheel on the iPhone. Everybody knows the spinning wheel. Like, this isn't done. Something's still happening here, but there's no confirmation. I'm sitting here, Roger, 24 hours later, money's out of the bank, and the trade hasn't been confirmed in my Coinbase account. Now, the stock got a subpoena from the SEC overnight. Stock's looking to open like 3% lower. I think it can go a lot lower. So what I would tell people out there about crypto is, don't sell your crypto. Crypto's like here to stay. If you want to hedge yourself, buy some Coinbase puts. Right. That's my trading idea.
There may be significant downside over the next few sessions on Coinbase, without any question of a doubt. And here's the thing: people have to be really, really careful right now, because you don't have the liquidity that you'll have coming into the market over the next 2, 3, 4 weeks. So you have a market right now that's very raw, and if you try to push that market, it'll create a lot of volatility. And folks at home, I want you guys to understand that. See, Jeff, it's very interesting. People who haven't been around the block, they don't understand that they don't understand that lack of liquidity increases volatility. They think it's the opposite.
Right.
And it's the liquidity that dampens the market. Yeah. So when you're looking at an asset always look at its liquidity level. And the less liquid something is, the more it has a chance to move, because there's not a price discovery at any given moment. So you don't have so you don't have that arbitrage situation. Like, take a look at a stock like Microsoft. It gets dampened anytime it goes 50 cents. It gets dampened anytime it goes below 50. But when you have an asset that doesn't have 1 billion people looking at it at any given time, it can go a little, out of weight.
ETFs are awesome. If you need exposure to small caps, you should just buy an ETF. Like,
right.
I, as a rule of thumb, will tell everyone, just don't get involved in low volume, illiquid stuff. The beauty of stock trading or investing is liquidity. Otherwise, you can get 5 times your money, 10 times your money in real estate leverage. Nobody's going to give you $500,000 to trade stocks, but they'll give it to you on 50 grand to buy a house.
Right.
But houses are illiquid. You can't just get out of a house in half an hour, but you can get out of stocks hypothetically in half an hour. So look for liquidity, use liquidity. That's one of the big pluses of the whole game.
And I just want to add, you made a very interesting comment about ETFs. A lot of people don't know what I'm about to tell them. This is actually really interesting. A lot of people don't realize that even an ETF is a different animal. It's not a natural asset.
No,
it's a fake asset. It's a mirrored asset. So an ETF,
it's a derivative. It's a
synthetic. It's synthetic. So even if you have a crazy move, the ETF can't get too far apart because it's synthetic. It'll be held by it'll be instantly arbitraged by the actual asset that it's mimicking.
I used to do that. I used to do ETF arbitrage.
Yeah, which is why I brought it. A lot of people are like, well, Roger, this ETF only has 20,000 contracts or 50,000 contracts traded daily. And obviously for options, that may not be a good thing. But I say to them, don't worry. If you're just looking for the ETF, don't worry. As long as the spread is not wide, as long as the spread is there, you're good, because the ETF will mimic the underlying no matter what. It can't get too far out of whack.
Within reason, people come in orbit,
Yeah. So do understand what we're talking about actually applies more to stocks than ETFs. ETFs are a lot safer than stocks from this randomness that we're seeing right now. What do you think about volatility? Do you think we're going to start seeing it second, third week of September? I do. I think October is going to be a volatile month. I think we're going to
see a massive up move in volatility. I mean, we're seeing like the market do nothing this week. It's slightly bearish, but down like, I don't know, 0.5%, 30 basis points. And you're seeing volatility up 10%, 8% on that. So what happens if you get a 1.5% sell-off? Volatility is going to go up 20%. You're gonna have a legit move. If you get a 2-3% sell-off, like a legitimate puke of the stock market, you could see the VIX back at 30. You can see it from 25 north to 30, which would be a doubling from here. So I don't think that's unreasonable because it's so suppressed right now.
I agree with you. I personally don't think we're going to get a lot of real movement, a lot of definitive directional movement from the market till usually it's the end of September is when we start seeing it setting up for the October. And I know you and I both agree that that October we're going to see some volatility, and historically October is the most volatile month of the year. Absolutely. As well. So before I let you go, I know there's just not as much to talk about this week. We've got the Fed data tomorrow. We've got the Fed data on Friday. I think things are going to be on pretty much as expected. The PPI is on Friday. We've got jobless claims tomorrow. We're expecting 350,000. Any specific sector outside of the financial that you think may be in for a surprise? I have one that I want to talk to you about very briefly.
You tell me.
Well, consumer discretionary. And I'll tell you why. There's a big divergence right now between tech and consumer discretionary, but it's been narrowing. And we're seeing this ascending triangle on consumer discretionary. And if it breaks up to the upside, we could see that consolidation between tech and consumer discretionary, because right now tech like business to business tech is rocking and rolling. Consumer tech it's a big divergence, which is not typical. And I know that we're having a lot of the supply chain issues, a lot of bottlenecks right now. That's playing in, and I know we have a lot of holiday shopping that's coming in, and I think that's going to play into the market over the next couple of months, but I am really, my eyes are on the XLY, ticker symbol XLY.
Nice.
And because it's it's tethering near the upper end of the range. And if it breaks out right now, we're going to make a multi-month high. And there's so much market capitalization. As you know, a lot of that sector is based on retail. Right. So that's my 5 cents on that.
I like that. I'm a little nervous about the U.S. consumer, though, in general, as a caveat to that longer term. I like it as a trade. I love it as a pair trade. I'm just a little bit nervous about how the U.S. consumer comes out of no stimmy money. Like the free money days they're gonna fade at some point a little bit. It's gonna start to happen. So what's gonna
fizzling? It's fizzling. It's definitely fizzling. Yeah.
So what's gonna replace that, right? Like we got to see that, and I don't know.
And look at the job and look at the unemployment last week. Mamma mia. Whew.
What's happening?
Right? I mean, the government's getting a little too exuberant with giving free money out. That's my 5 cents. But you and I've talked about that.
There's jobs. This is, I was having a back and forth with one of our buddies, like a colleague, and it was like not a back and forth. We're agreeing most part, but there's, unlike most recessions where like people can't find jobs and they're wishing for the economy to recover. We had a manufactured recession because we had to shut down what was a very hot economy because of the pandemic, but it was manufactured. It wasn't a cycle. It wasn't a cyclical recession.
No, it wasn't financial. No,
it wasn't done in the normal life cycle of an economic cycle. Typically a recession follows a period of an incredible boom. And it's just the way the economy works. It's the way investing works. It's just we live in a planet of cycles. And this was not in the normal part of the cycle that the recession happened. So there are jobs out there, unlike in previous recessions where you have to wait a few years for organic growth to the job market. People just, on the lower end, they don't want to work. They don't have to.
Right. They don't have to. And unfortunately, Jeff, I'm seeing it.
Of course. Unlike in previous recessions where you really feel bad. You're just like, what? And in those spots, it's like, no, we have to help people. Like when we saw in 2008, when we saw like, post early 2000s, it's like, what are you going to do? There's nothing to do. These people want to work. There's no jobs. Then it's like, you got to help people. But now it's like, okay, you don't want to work. You just want $300 a week to buy NFTs and play video games. Get your ass out to go fill out an application.
Agreed.
I sounded like a grumpy old dad, but that's what my dad would say. Get your ass off the couch. Go.
I couldn't agree with you. I couldn't agree with you more. Lastly, before I let you go, the $1 million question. Do you think the current COVID environment is priced into the market, or you think there's still a lot of unknown?
That is the $1 trillion question.
Right.
I don't think we cure COVID. I don't think COVID ever leaves the planet. I think COVID is here to stay. I think that the vaccines will get better, the therapeutics will get better. A certain amount of the population, about 15 to 20% of the population, has been irrevocably harmed psychologically by what has happened. The behavior has been shifted. They will not go back to living the way they used to live, no matter what, because they don't trust anything. They don't believe anything. They don't want to do anything. I heard a funny saying, and let this register in your mind. The people that should be scared of COVID aren't, and the people that are vaxxed and shouldn't be scared of COVID are. And that's like that terrible combination. So as long as the people that should be scared of it don't get vaxxed, are unhealthy, don't treat themselves, don't get vaxxed, it's going to stay around. And as long as the people that are vaxxed are scared of it, and they shouldn't be, the economy is going to have a little bit of a wet blanket on top of it.
Agreed. I couldn't have said it better myself. Jeff, get out there, make some money. The market's about to open, and I will catch you next week. Folks, if you want to reach out to Jeff, it's jeff@joyofthetrade.com. My email is support@marketgeeks.com. If you want to check out some of Jeff's goodies, do so at wealthpress.com or joyofthetrade.com. Jeff, have a great week, and I'll catch you later in the week. Bye, everyone. Bye. Bye.